This week, let's talk about some things that are very important if you want to run your cannabis business rather than having it run you. And that's what we call key performance indicators, or KPIs. I'll talk about the 7 most important KPIs as well as the important KPIs for each vertical. So you're going to want to check this out. Hi folks, Chip Schweiger, the Green Leaf CPA, and I help everyday cannabis entrepreneurs build and grow exceptional businesses using the same growth tips that the big guys use. Welcome to Ask the Green Leaf CPA. In today's video, I'll talk all about KPIs and how important they are if you want to turbocharge the growth of your cannabis business. Baseball's leadoff batters measure their on-base percentage as the number of times they get on base as a percentage of the number of times they get the chance to try. The similar is true for doctors who in the developing world measure their progress not by the aggregate number of children who pass away in childbirth, but by the infant mortality rate, which is a ratio of the number of births to deaths. Investors and potential acquirers, if that's a direction that you may be headed in the future, also like tracking ratios, and the more ratios or KPIs you can provide, the more comfortable they'll get with the idea of being involved in your business. Better than the blunt measuring stick of an aggregate number, a ratio expresses the relationship between two values, which is really what gives them their power. And that power, by the way, can be harnessed by you for your cannabis business, even if you want to run it forever. Hey, if you're new to this channel, go ahead and hit that subscribe button and click the bell so that you'll always be the first to get my tips and tricks. Okay, so here's a list of 7 KPIs to start tracking in your cannabis business now. And the first one is revenue per employee. So what is it? Well, it's the net revenues divided by the number of full-time equivalent employees, or what we call FTEs. Now, the resulting ratio would be listed as a dollar value. And why this is important is payroll is the number one expense for most every cannabis business, which explains why maximizing your revenue per employee can translate quickly to the bottom line. Business Insider estimated that Craigslist enjoys one of the highest revenue per employee ratios at $3.3 million per employee, followed by Google at $1.2 million per bum in seat. Amazon was at just over $1 million, and Facebook was at around $920,000, and eBay rounded out the top 5 at $530,000. What these mainstream businesses have done to measure and increase their revenue per employee can provide the same value to you, the cannabis entrepreneur. Now, a second one is employees per square foot. And what this is calculate the number of square feet of office space you rent and divide it by the number of FTEs. And why this is important is you can judge how efficiently you've designed your space, which is especially important for dispensary operations. Commercial real estate agents use a general rule of 175 to 250 square feet of usable office space per employee. And post-pandemic, this ratio will likely become even more important. Another one is sales per square foot. And so what this is it measures the gross sales divided by the square footage of all of your operating locations. And why this is important is by measuring your annual sales per square foot, you can get a sense of how efficiently you're translating your real estate into sales. Most industry associations have a benchmark, and with real estate usually ranking just behind payroll as a business's largest expense, the more sales you can generate per square foot of real estate, the more profitable you are likely to be. Super important also if you own a dispensary. Now, the fourth one is gross margin per product. And what this measures is the individual gross margin, sales, price minus the cost divided by the sales price. And what it tells us is what products are most profitable and which ones have tight margins. And why this is important is, well, the adage of the 80-20 rule is super important here. 80% of your sales come from 20% of your product lines or services, regardless of the vertical that you operate in. Now, we recommend optimizing your offerings to the most profitable, and you can only do that if you know and track your gross margin by product. Also, look at customers per account manager. And what this really measures is how many customers do you ask your account managers to manage. And why it's important is, well, finding a balance can be tricky. Some bankers in mainstream, for example, are forced to juggle more than 400 accounts and therefore don't really know each of their customers, whereas some high-end wealth managers may have just 50 clients to stay in contact with. It's hard to say what the right ratio is because it's so highly dependent on each industry. But in our industry, if you're a cannabis brand, for example, selling to dispensaries, slowly increase your ratio of customers per account manager until you see the very first signs of deterioration, which could be slowing sales or a drop in customer satisfaction. That's when you know you've probably pushed it just a little too far, and that's when it's time to scale back. The sixth one is prospects per visitor. So what this measures is the proportion of your website's visitors who opt in by giving you permission to email them in the future. And why this is important? Well, we all know that we can't sell most cannabis products online, but your customers are checking out your website and you definitely want to develop a relationship with them. Dr. Carl Blanks and Ben Jessen are the co-founders of Conversion Rate Experts, which advises companies like Google, Apple, and Sony how to convert more of their website traffic into customers. Now, Dr. Blanks and Mr. Jessen state that there is no such thing as a typical opt-in rate because so much of it depends on the source of the traffic. They recommend that rather than benchmarking yourself against a competitor, you benchmark yourself against yourself by carrying out tests to beat your site's current opt-in rate. Now, the easiest way of increasing opt-in rates is to reward visitors for submitting their email addresses by offering them a gift that they'd find valuable and information. So products such as online white papers or ebooks or videos or calculators make ideal gifts because their cost per unit can be almost zero. Discount club member cards for dispensaries are also a great idea here. And lastly, let's talk about Ebitda. So what it stands for is earnings before interest, taxes, depreciation, and amortization. Now, this is a mainstream financial concept, but it's also the mainstream financial concept for like the last 50 years. And why it's important is Ebitda, and in our industry, it's Ebitda adjusted for the effects of Internal Revenue Code Section 280E, helps every business understand how truly valuable and profitable your company is. And because Ebitda is a measure of past profitability and an indication of future profitability, it's that tried and true acid test to determine what companies are worth, and it's increasingly being applied to cannabis businesses too. And the pro tip, we talk a lot about having regular communications with your investors. Ebitda is one of the best KPIs you can share with your investors because it's so powerful to understanding the business and their investment. Now, with so many KPIs, it's easy to feel overwhelmed by the amount of data you can use to uncover information about your cannabis business's performance. I get it. I think the trick here is really ensuring you're collecting enough data to produce good KPIs. If you haven't already, consider incorporating a robust point of sale system and a CRM system to communicate with your POS tool. Software and systems can help you maintain your books, think QuickBooks, but other more Canna-friendly systems like Xero also include CRM modules. Using these in conjunction with spreadsheets to keep your books in order and make producing management reports that much easier. While you might be tempted to look at certain points in time, a singular moment only offers insight into one data point. To analyze the entire history of your business's financial performance, connect the dots to form lines. Now, these lines offer a more complete story of your cannabis business's financial health. You'll see whether things are improving, whether they're getting worse, or remaining the same. Analyze your data once each month during your first year of operation. Then, it's best to perform these sort of analyses quarterly to gain the most insight possible. Before we go, how about I break down some specific KPIs depending on your operations vertical? I think this could be really helpful. So for cannabis dispensaries, I would look at average spend per transaction and sales per square foot and revenue per employee. You might also look at customer frequency. Remember those club member cards that we talked about a little bit before? And definitely EBITDA and gross margin per product. For cannabis cultivators, waste management costs are important, as well as your grow cycle time and yield. So I track those, and also gross margin, and again, by product or really by strain. We all have our favorite personal strains, but you want to sell more of the ones that are also profitable. And popularity and profitability are not always the same. And also I look at product turns. For cannabis manufacturers, I think it's really EBITDA, gross margin per product, but also manufacturing cycle time, which is how long from start to finish. And then I'd also look at WIP inventory and turns and also your yield. And let's say you have a cannabis delivery service. I track distance per delivery, fulfillment turnaround time, time per delivery, and perhaps revenue per employee or per driver. To sum it all up, if you can develop a healthy appetite for data, and the more valuable you are able to make your business, and the more attractive your business will be. KPIs are the tools large corporations use to increase profitability, and they're the same tools that are available to you. And if you want to learn more about anything I talked about in today's video, check out my website at www.thegreenleafcpa.com. There's a wealth of resources there just for you. If you've enjoyed today's episode, please give us a like. And if you'd like to see more, hit that subscribe button and click the bell. And if there is something that you're stuck on in your cannabis business, go ahead and drop a comment down below. I get back to every one of them personally. Now, we drop new episodes each week, so I hope that you'll join us again. Thanks so much.